What's up, YouTube? It's Joe Catchpolia sitting on the couch, making some money investing in fractional real estate online, as usual. Actually, today's going to be a little bit different. This is going to be the first time I try to re record a video. If you tried to watch my video yesterday, the one about fear and greed and how emotions are, detrimental to your investing, you probably noticed there was a ton of noise in the background. I didn't realize it when I was filming it. Also didn't realize it when I played it on my laptop. For some reason, I couldn't hear it there either. But a couple of people brought that to my attention. I really appreciate that because, I don't want an unwatchable video out there. Uh, Looks like, the average view time on it was extremely low. So I get it. I'm going to try to cover the same topic today. If somehow you did manage to muscle through that one, I think that I don't think this is going to be a useful video for you to watch. But so what am I talking about? I was, bringing up that this is again, reading out of my book, The Most Important Thing. Howard Marks, he's a billionaire investor, mostly in debt products. But his stuff I just love, and I keep going back to the same. It's a very simple book, but I think that you can read it 100 times and get something new out of it. And if you go to chapter 10, there's a section about, investing and how emotions can get in the way and cause you problems. What I want to do is just cover a little bit about some of those emotions and just give you some examples of how I've seen this play out quite a bit with some of the other lofty investors recently, primarily, maybe some of the other platforms as well. I'm going to just quickly talk through. Well, I say quickly. Yesterday wasn't super quick, but I'm going to try to get this done faster than I did yesterday's, and go through what the different emotions and they're not exactly all emotions. They're like psychological, not issues, but effects. Things that affect the way that we think about investing and maybe make us make poor decisions. I'm going to go through those kind of somewhat quickly, point out the places where I've seen some of those play out, and I think most of the people that are losing money on Lofty, that obviously I like to think very much about the actual fundamentals of deals, but I think that a lot of the times when people have lost money, it's not that they dug into the fundamentals and misunderstood something. It's that they made an emotional decision, and that's what led to the problems. So I'm going to go through those, and then I'm going to go through his. Basically, he has these uh, concepts that help you avoid getting stuck in those problems. So that's going to be once I outline what some of the issues are. I'll go into that. So let's see where we get. So the very first one is greed. This is it's very common. And this is he talks about investing in general. He's not talking about fractional real estate investing like I am. Um, which reminds me, I don't know why it reminds me, but please like and subscribe. In the show notes or in the uh, description for this video, there's a link to the Fractional Real Estate Investors Discord channel. Feel free to join there, and there's about between 40 and 50 of us now. We get in there and talk about fractional real estate investing on all different platforms: Mogul, Lofty, Ground Floor, Collab, Arrived. There's people that lost money on Landa on there. All of those. We talk about all those. Also, in the description to this video, there's links to all the places where I'm currently invested. Just because I'm investing on those sites doesn't mean that you should. Please do your own due diligence on those platforms and on any properties that you look at on those platforms. Just because I'm invested in some of those doesn't mean that it's the right deal for you. So anyway, first one, greed. I think this one is one of the, probably the most obvious, but it certainly affects people quite a bit. And I think that the one, the way you see this play out a lot on Lofty is somebody will come in, they'll look at a deal, they'll say 35% projected return. That's it, right? It's the highest. It's the highest yield on the platform. I'm going to invest in that. They don't think, what are the risks? Why is this giving us such a high return? I don't think this is necessarily the greatest example because I think Earl, who's bringing this one to the platform, is a great operator, and so maybe it's worth digging into that one. But certainly, we've seen several of these properties that come up with high yields that are probably unsustainable in the long run, depending on how the deal works out, are often just the result of some sort of financial engineering, whether it's a rent credit when a property is not really performing. It could be very high leverage debt, which is just throwing off extra yield, and in many cases that debt is not sustainable, meaning that it's the monthly payment on that debt is higher than the income from the property, but it's being paid outside of the Dow structure. There's all these different situations where you can see the potential, or you're told that there's going to be a high yield, and people are like, hey, I just want that deal. I'm gonna go for it. The other place that greed shows up a lot, and this is more in stock investing, but I think you can see it on here a little bit, is when people see that prices are moving up, they often invest in something because they're like, ooh, this is making money. Let me get in as it makes more money. But really, as the price of an investment goes up, your expected return on that investment goes down. So it's creating the opposite behavior that it should. On the flip side, you have fear. I think it's pretty self-explanatory, but a lot of times people make very poor decisions because they have some sort of fear. The biggest one that you see, especially this plays out a lot on Lofty, is a token price has gone down, and because that price is going down, people get scared and they sell their tokens at an even lower price than what they could have sold them for a week ago. Um, where if you think about it, and what we talk about a lot is each token has an intrinsic value. It's backed by a piece of real estate. The fact that the price of that token has gone down has nothing to do with the value of the property in the real world. And so very often you'll see prices starting to dip, and then because of that you'll see sell-offs, and then they go down further and further. And so that's where that's one of the ones that I really try to pay attention to and take advantage of. And one of the things I want to point out is I am not immune to all of these, right? Like uh, there's a good example. Um, Colfax, I missed out on this one when it was trading in single digits. I sort of fell into the discussion that everybody was having about how terrible of a property it is. But at $5 per token price, I probably should have taken, probably should have bought whatever was available when it was that cheap. And that was just recently. It's already back up to $20 per token. The other place we've seen fear come into play is people have had um, some negative experiences with their properties, and instead of making rational decisions of what we should do next, a lot of people have made poor choices as far as either selling properties for less than we should have in some instances, or if there's a fear of loss, holding on to a property too long because a lot of people think, well, until we actually sell that token or the property, I haven't really lost money, which is a completely, it's a sunk cost fallacy type thinking. It's completely erroneous. Or also, people have chosen to use some managers out of fear of just continuing to have a bad time, and without really doing any due diligence, made certain moves over time. Um, Willingness to suspend disbelief or self deceit. This is one he talks a lot about, where because you want a certain thing, it's easy to believe it, right? So, like a lot of people, when they were moving, there was a couple of properties that had gone over to this manager, Yom. If you're on Lofty and you're into the Discord, all sorts of things on how that played out. But people, they wanted to believe that this was going to create a solution for us. Most of the properties were in disrepair. The managers weren't doing a good job. Somebody came in and had a good sales pitch, and many people, despite certain evidence to the contrary, really early on, just didn't really believe that, because it was more beneficial to believe that that everything was going to work out the way the person said, and that so that's one of the things that a lot of it's really easy to believe the things that would be good for you if they were true. And it sort of plays into the ego as well, as far as like a lot of people, once they make a decision, um, it to change their mind. A lot of those properties, it was really quickly evident that things were not working out the way that we expected on a lot of them. But because people had made a certain decision, they didn't want to feel stupid. They didn't want to, go against that decision. It would, really hurt their ego to change their mind very quickly. And so that's what, a lot of times we'll see there's a certain vote made. We decide to go in a certain direction. It doesn't work, and there's a lot of pushback because it makes us feel bad that we made a bad decision. Excuse me. This one I think we saw on Odom. You know, that was it's one that's we're trying to sell at this point, and hopefully we get a good price for it. It looks like that we maybe will, but it's one that I think it was really obvious months ago that there was no clear path forward for that to be a profitable investment. It was a long term rental. It switched to midterm rental. It just the price of the property relative to what it can bring in was just never going to be something that produced a high return. Um, but it was, I think, a lot of the people that had bought into it early, had a hard time deciding to sell it because it makes, in order to get to that point, you have, especially because it's going to sell below the $50, per token mark. It's probably going to be in the high 30s. And so anybody that bought it at that higher price, it's a big hit to your ego to have to admit like that was a bad decision. The best thing we can do is liquidate it and move that into another property that's going to, create a better return. Um, another issue that lots of investors run into is conforming with the herd. They see everybody doing a certain thing and they want to do that same thing. I think that is, that's one of the things that we saw when a whole bunch of properties moved over to one particular manager, long before we had any evidence of whether or not that was going to work out or not. Um, One thing that I'm a little bit worried about is that we're seeing that behavior again. We're seeing everybody move over to a couple of managers. The difference this time is that they're known quantities, people that we've all interacted with on the Discord, maybe owned some of the other properties they've run for a long time. So I don't think it's exactly the same situation, but it is. Sometimes I always just get worried when a whole bunch of people are doing something, and then so we're going to just try to apply the same strategy to every single property, without necessarily stopping and thinking like, is this the right move for this particular property? Now in this case, I'm actually pretty happy about it for every single one that I've looked at, but it's something that I always try to keep in mind. Am I buying this because everybody else is? And so that also comes into play as certain managers and certain co-owners get popular. You'll see some of those properties get bid up potentially more than they should be, right? Like, because at a certain price point, even a deal that's giving you a high yield turns into a risky deal if for some reason you become a forced liquid, you're a forced seller, and it's liquidating at a price where you're losing money based on what you bought that token for. It doesn't matter how much you trust the operator, or how good of a job they're doing, if something happens like that, right? Um, I do start to see some of this kind of like halo effect around certain co-owners, where people want to buy those properties just because the co-owner's there, and then other people want to do the same thing, and so that's sort of the conforming to the herd. Um, it's a little bit of a fine line though, because there's the difference is there's social proof, which I think is something that we should look at. Is have we seen these people do well for other people? That's one reason that we might want to be invested in deals that they're doing. And I think that's an important thing, right? I mean, see, understanding who you're actually investing with, who's operating the property. But when it starts to become, well, everybody knows this person, everybody likes them, let's just invest with them. That's when I get to, I start to worry. And so, and one of the things, um, I actually get worried about this a little bit when I'm looking at the mogul properties, because I've just gotten to a point where I really trust those guys. I think they're doing a great job picking properties. again, just because I like properties that I buy pieces of them, doesn't mean you should. You want to do your own due diligence. But I do start to worry that I am getting, that I'm just like, oh, well, and especially now they have their little groups. And so you can see what other people in your individual clubs are buying. And so then you might want to. So that's the basically it's one of the things I like to worry or think about, but it is something. Another one is envy. Actually, I've seen this play out a little bit in the Discord where people talk about like how much of certain properties they own, and I've seen people go and buy more tokens so that they can own more, which is I think a kind of a silly thing to do, and sometimes it's a small amount, and it is just to be funny. Um, but at the same time, if I own 150 tokens in something, and so you want to have more than that, but your basis is 25% higher than mine because that's the only way you can buy tokens in it today. Well, I think that's a place where envy might be hurting some people, right? Like where you're trying to compare yourself to some other people. Um, Maybe they got a certain the opposite I think sometimes happens is sometimes you might know that somebody else got into a deal at $15 and now the only way to get into it at 25, and so because you're jealous of that low price you don't invest at the 25, you're waiting for the 15. I think that that's really dangerous, because if it's a deal at 25, buy it at 25, right? Like, I mean, those feelings that you start to get around certain price points and stuff like that, shouldn't really play into the decisions that you're making. And then the last one, capitulation. This is when you're basically, this is much more common in stock market investing, but it's basically like when everybody, so for example, towards the end of a bull market, it's when everybody finally agrees, yes, this market's going to go on forever. We should all be buyers, right? Or on the sell side, everybody agrees, oh, things are just going to be terrible forever, right? At the bottom um, of a bear market, and so on Lofty, I think you can see this play out a little bit, um, where there's large groups, everybody's interested in a certain property and thinks it's going to be good, and there'll be people. Um, there'll be people that will sort of argue against it for a little bit, and that's one of the things. And you don't necessarily see this on the Lofty Discord as much as I do in like just discussions with people. But they really, uh, you don't want to keep missing deals, and being wrong, right? And so then eventually everybody just starts buying them, and then that moves the price to a point that they don't make sense. I think describing that I think it is much more applicable to the stock market than it is to, um, it's not as obvious, apparent on the surface of deals, but I've gotten the feeling of it, and I just don't know that I can really, um, put an exact point on that. So sorry about that. We're just going to ignore it. But so those are the things that come into play in the psychology of investing, right? And that really, and I should have started off with this, but obviously, I don't have a psychology degree. I took a little bit of, some courses in it, and read some books on it as far as how it applies to investing, um, and the work, a little bit in the workplace type stuff. But I think that, so it's something I've studied, but I'm certainly not an expert, right? Mostly I'm sharing, paraphrasing thoughts from my guy here, Howard Marks. Again, if you haven't read his book or if you don't watch his YouTube channel, I think he's one of my favorite investors. Really has changed the way I thought about things. But so, these are basically all issues that he's pointed out. And then he's got ways to combat them, right? And I'm actually just going to look at his list and talk to you a little bit about them. But the number one way is just having a strongly held sense of the intrinsic value of your investment, right? And so if you think about what we talk about on this channel all the time, we're doing due diligence, we're digging into the value of the property. Um, that's the goal, right? Like if you're paying too much attention to, um, the price movements and the chatter around a property, and not enough attention to the actual value of the property itself, I think that's when you get hurt, right? And that's when, I know I said this, almost the exact same thing. But I think that when you're looking at oh, and I can't think of what it's called, right? When you're looking at, like the charts and graphs and um, not value investing, not fundamentals, but the opposite, which is when you're looking at technical analysis of like stocks or looking at price move charts. I really believe that's just astrology for finance people, right? I mean, I think that it is like the reason it's right sometimes is that you just have the herd all moving together, believing it's right. There's no particular reason a lot of those things have to work the way that people think that they should. Um, the only true thing that we have is the intrinsic value of whatever is behind these tokens, right? Whatever the property is worth. And so that's why, having a strong focus on the intrinsic value helps you to avoid a lot of these, right? Because um and you can, some of these can come into play when you're trying to value the property, right? You might be thinking about like where's the direction of the economy as a whole, where are interest rates going, how are different macroeconomic things going to impact what we have. And so there's I think there's always the risk of that, but that's like a second order thinking, right? It's apart from the just focusing on price movements and having certain feelings about that. But so number one is focus on the intrinsic value. The second one is an insistence on acting as we should when prices diverge from values, right? And so it's one thing to be focused on what that value is. It's another thing to actually act the right way, right? So if the token price has moved significantly lower than the actual value of the property, we have to have a commitment to buy when that happens. And if the price goes significantly above what we believe the intrinsic value is, that's you should be committed to selling when that happens. A lot of times, people, especially when the price moves up, they get caught up in, oh, look at how well this performed. That it creates this good feeling, and that sort of leads to this. The greed and the ego come into play here, and we think, let me just hold on to this and let it keep going. Where oftentimes the path to profit is to sell those winners. Sell when if we believe it's that price per token is much more than the actual value of the property. You can take your profit then, move it into somewhere else where it's undervalued, right? And so having the commitment to do that, um, understanding what you should do is one thing, right? Committing to making those right moves when you see the divergence is the next. Um, Being familiar enough with past cycles and history, uh, and what he says is basically like reading up on history until you have the actual experience, to really understand how cycles work. Because and I think he's really 100% right about this. I went through, I have a master's degree in land economics and real estate. I'm trained in how values move, and how economics and um, different things impact the value of real estate. But until I went through the 2008 crash and saw like how that played out emotionally for a lot of people, um, I wasn't prepared for how, I think I should have spent more time studying how people have worked through bubbles and crashes in the past. And I think I would have been even better prepared. And now, ever since then, I think, having that experience has been really useful, to help me not make poor decisions with my investments. Um, in large part, one of the things that we did, we saw is after the 2008, property crash. I mean, you just saw people like there were people that just thought prices were never going to come back. Real estate was just the riskiest thing in the world. And they weren't picking up deals. It was hard to get lending, so it wasn't, there were good reasons not to as well. But there were tons of people that just had given up on the idea of it, instead of realizing that, hey, this is just this is just unbelievably cheap right now. Um, So, basically, having enough experience and knowledge of those cycles to realize like how they're going to impact. And so, he mentions just, the only way to get there initially is through reading, about history, but then also, paying attention. And that's one of the reasons why I'm not putting a ton of money on any of these platforms right now, because they are, even though I understand how the real estate market works, the lofty market and properties and fractional real estate is new, and picking up on how there are definitely like some cyclical changes in price, and like even like on a monthly basis you can see movements in certain properties. um Either it's because the STRs have their seasonal changes, or any number of things that can affect prices, that are outside of the changing the real estate value. Um, One of the other things is have just having an understanding of the psychological impacts, right? Like really digging into what all of these things mean and being able to identify them helps you to not be affected by them, right? Um, a lot of times, just being able to name what is going on in your brain helps you to avoid, realizing I'm just being greedy here. I'm just letting fear win. This is just an ego driven trade, right? This is a decision that is based on conforming with the herd, like understanding what's happening to you, and really being able to think through, like, when you're making a decision, am I letting one of these things affect me? Can really help you. The next one, um, making a promise to yourself to remember that when things seems good to be true, they usually, or things seem too good to be true, they usually are. This is one that, I'm an optimist. It's helped me very much in business, but in investing, you don't want to be as much of an optimist, right? Like that's how people get hurt often. That's how people fall for Ponzi schemes, all sorts of things. And so, um, under if you have a if every other property is a 10 or 15% yield, or buying on every other platform, or buying real estate in real life, you tend to see mid-teen IRRs. But then you come to a platform like Lofty and you see all these properties that are offering 20% plus yields. Well, that's probably too good to be true, right? Like, there's no reason that anybody is going to consistently be paying that higher yield, and so you have to understand what's going on. And so, like, often, like some of these, they'll explicitly have a high yield in your first year, and it'll go down each year. Um, which means that the implied yield during your holding period is never going to be what they're saying the yield is up front, right? And so understanding, like, you just not falling for that deal that just looks like it's too good to be true, right? Because there's a reason that's the case. I mean, there often are. Now, there are some exceptions. um so one of the things, when you see me talk about making these really high returns on the discounted tokens, when you've seen some of the ones like Keeler, I think I made a 45% ROI. And if you annualized it, because it was a very short time period, it was like 122% IRR. Um, in most people's mind, that sounds way too good to be true. And in mine, it does too, right? Like, sometimes I feel weird talking about some of those deals, because those returns are way too high. But there's a couple of things going on. One, there's not an unlimited supply of those, right? Like, I think Keeler, I might have owned like 56 tokens or somewhere around there. And that was all the ones that were available at that really high yield. And so I didn't have a great return on my time because I spent time accumulating them, but there weren't more that I could buy at the cheap price. And so sometimes, one of the exceptions I think to this is it too good to be true when you're looking at return on investments. It's not that the deal is actually a trap, or it's that, um, from a return on time standpoint, sometimes we're actually just putting some time and effort into a deal, and it makes our returns higher. But what is actually happening is we're getting paid for our time and effort. It's not really that it's just some fantastic deal. Um, that's one thing that I do think is kind of an exception to that. one of the things that I think is important is, and he's got it in his list, is having a willingness to look wrong, right? Um, this came into play a lot for me. When I owned some of the properties that were taken over by Yom, and I immediately was asking questions and trying to get people to vote against it when it was taking over ones that I was perfectly happy with how they were doing already. And I definitely should have pushed back a little bit harder than I did initially. But a lot of people were, jumping on me for it, saying, "Hey, it just works different. Just trust it. This is how it's going to go." And I think that I definitely fell into the position where, you know, I didn't want to just keep going because maybe I was wrong about it. Maybe I was missing something. There was a lot of people that were on board with it, right? And so, uh, I guess that's not a perfect example because what I did is I just stayed away from them personally, so it didn't really affect my investing outcome very much. But I could have definitely done better there. But also, too, just in general, sometimes it's hard to buy some of these properties that are in terrible markets that the property is not doing very well. Even though I know it's an amazing discount, um, it's hard, like if I bought some of these $15 tokens and I end up losing money, I'm going to look super stupid, right? And so because it's like, well, obviously that was a failed investment. And I think sometimes that's why some people avoid those because it doesn't look smart to buy a failing rental property. But if you actually go back and look at the intrinsic value, I think it is a good decision. Um, yeah. So, I mean, being willing to look stupid comes in that form and in picking much different properties than what other people are picking. It happens a lot in the stock market where when the stock market gets very high and everybody's buying in, you want to be a seller at that time, right? And if you're the only seller, then you look dumb, especially too if okay, what if it goes up another 10% and then you lost out on that you lost out on that gain, but really what you did is you took some profits and you protected yourself a little bit. Um, and then the last one he mentions is surrounding yourself with like-minded friends and colleagues who will support you in the same kind of rational thinking about investing. And I if you haven't realized it already, that's my main goal for with this channel. I've been trying to really build a community, inviting it into the Discord, talking there. Make comments on the videos. I'm happy to talk to you there. Many people have reached out to me through they found me on LinkedIn or sent me an email, or some people found me on Facebook. I'm on X a lot. That's a good place to find me. Just search my name. But at any of those places, I'm in the Discord. I have my Discord open every single day. You can DM me if you don't feel comfortable just posting in there. Um, my goal is to have, a place where we can just all get together, talk about investing, help each other understand certain deals. Sometimes there's a lot of times I'm looking at a certain deal. I've done some due diligence. I put out a video about it. People could bring up other great points that maybe is something I didn't think about, or they just researched it a little further than I did. Um, you know, Sometimes on Lofty it feels a little bit weird because we are competing for the cheap tokens. They don't stay cheap very long. But in the long run, in general, I believe we're all better off by, um, pushing the platforms and pushing the co-owners to provide the types of info that we want them to be provide transparency to having other people in our deals that are going to vote in a way that we think makes a lot of sense. I think there's a lot of benefits there, and so it doesn't necessarily have to be just competing for the cheapest tokens. I definitely tell you all the ones I'm buying tokens in, and I'm still able to get cheap deals. And maybe it is that people just don't think I'm picking the right ones, and that's perfectly fine. But creating this community is the main goal of my channel. It's the reason I set up the Discord. Just to make sure, I know I've mentioned this before, but it's not a sales funnel. I'm not trying to get you to buy real estate from me or something, which is my day job. Really is just, I think that we all benefit by having a place to talk about fractional real estate investing in general, talk about the different platforms, sometimes have a united front when we're approaching a platform about certain issues, things we want to see them do different. Maybe having a strategy for particular properties that we all want to get into, all that sort of thing. So anyway, that's really all I want to talk about. I had been, like I said, I always go back to this book, and I think that it's definitely worth reading if you haven't already. It's not specifically about, and it's called The Most Important Thing by Howard Marks. It's not about real estate at all. I'm taking the thoughts that he has about investing in general and applying them to what we're doing here. I think they actually, one of the reasons I'm so into the book again lately is that I think a lot of the ideas apply more to fractional real estate than they do to real estate in general. This is the first time in a long time that I've been in markets where prices fluctuate daily, versus, when you own property in real life, you hardly ever get a new appraisal, right? Like, unless you're going to sell or you're thinking about selling, you don't really know what your property's worth. Um, I'm getting, you have all these other benefits as far as like the ability to diversify, to average down your bases, all these things that are sort of more thought of as like traditional investing in stocks and bonds. We get some of that on a lot of the fractional real estate platforms, especially here on Lofty, because they're the secondary market. I think more of the platforms will have secondary markets eventually. But so that's really why I've gotten so much, back into a lot of his stuff. And I think it really applies, especially, when you see people talking in the Discord about the way they go about buying and selling deals, you can tell a lot of it is emotionally driven and in a way that sounds rational sometimes when you talk about it, like it's people, they say it in a way, um that it's not identifying it as an emotional thinking, but it's often the case. So anytime that we can identify that and try to avoid it, I think it's, what we should do. Now I realize I've talked just as long as I did last night. It's funny, I am just very much, um, I know I go on extra tangents sometimes and can be long winded, but hopefully some of you guys are getting something out of this. Uh, a lot of like these general investing ideas. Um, this stuff is just deep in my brain, and like when I talk about our deals in general, I think some of this stuff is, I take for granted. And so that's why every once in a while I'm trying to do one of these where I'm just talking about like really general, more general investing stuff, but I think it does apply directly to what we're doing on these platforms. So hopefully some of you find this useful. Hopefully this sounds a lot better than yesterday's. Again, I'm sorry about that. Thank you for letting me know there was a problem. If any, if you ever have problems with any of my videos, either, not being loud enough, having any sound issues, um, I noticed some of the older ones are really blurry, and I can't get them. I have no idea why that's the case. It didn't look like it when I was using. I think what I have to do is probably change the software that I use to record these too, because somehow it will play them and they'll seem fine, and I'll upload them and they won't be fine. So anyway, I think that's really everything for me for today. Until next time, I'm going to keep making mistakes so that you don't have to.